Did you guys just see what the Fed did today? They did the unthinkable, and it might backfire in January. Let's get in. First, we have the Fed meeting recap. Central bank rate cuts rates for a third time and shows its biggest split in years. We also have the Fed seeks only one rate cut in 2026. No hike ahead, says Powell. Whoa, Mr. Powell, we're going to go ahead and see in the chart what actually might happen in January. Here's your 2-year yield. The Fed is this orange line right here that's heading downward. The yield itself is the blue line. The red line is just the moving average that I use. And you can see you have a head and shoulders pattern and you got rejected by the downward trend line acting as a form of resistance. Does that mean all hope is lost and we will keep cutting rates and no more recession? Well, actually, if you look at this chart, you haven't broken completely out of the descending triangle that we're in. So it can keep just bouncing inside. But due to the head and shoulders pattern, we still have a high probability of it breaking upwards, which might get a rate hike in January. Let's keep going. Oil settles higher after US seizes tanker off Venezuela's coast. You might be saying, Gordo, what is this going to do to oil prices? Well, if you look at the chart here, you are actually in a pattern. It can break either way. I have a price target on it, and it has not broken out yet. What you would see if it breaks up, you get more oil value. That might mean something might have happened military wise. But if it breaks down, cool, nothing's really happening. But that's all you need to know. You guys also have a prediction from Yahoo Finance. Bitcoin will hit 130,000 in 2026. If you guys haven't seen before in one of my previous videos, this is your Bitcoin right now. It was in a giant wedge and it broke down out of it, and now you are in a smaller wedge. And as long as you don't break this little orange line right here, you'll be fine. If you break upwards, break this blue line here, you still have to break back into the giant wedge pattern, where I don't think it will break into it, but only time will tell. I'll keep you guys updated. We also have silver. The silver trade that I measured out is almost done playing out. Thrown in here to give you guys a real asset instead of a speculative asset, which Bitcoin is a speculative asset. Usually falls first in times of recession. Anyways, Ed Yardney sees S&P 500 reaching 7,700 next year. Says profits and growth will remain resilient. Just to give you guys a chart, this is just big investor, but this is the chart itself. You guys are trying to peek your head through that top line right there. And after you break out of that line, you need to find support on it or just keep going up. But you also have a giant trend line that goes back since forever ago that price recently got rejected from. And now if you go up and touch that, you just need to break that too to be able to follow what Ed Yardini, I wish I could remember his name well. In the last video, we went over what is money? How is money created and how is money destroyed? Very interesting video. Now I will explain how interbank lending works. So picture this. You're a big bank, I'm a big bank. We need to loan to each other to be able to have liquidity in the markets. Let's say I'm short on T-bills, which is my collateral, and you're short on your T-bills. That is your collateral. So we just equally exchange T-bills, we pay each other back, we loan each other the bills basically. See, remember in the creation of money, it's just a loan. So bigger banks just loan to each other out of trust that the other will pay it back. But in times of no liquidity or low liquidity, you have big banks not lending to each other. So now you don't have money flowing around. Because remember, how money is destroyed is if you pay off that loan. Well, if the loan's not there in the first place, you don't have money. So when the big banks stop lending to each other, they have to go to the Fed. Problem is, the banks have to have enough collateral, so they have to have enough T-bills in their inventory to be able to get more money from the Fed. So the Fed can essentially bail them out in a sense, help save them. And that is how global liquidity can get affected if banks just lose that trust due to people defaulting on loans. And please subscribe if you enjoy content like this, and comment down below if you guys enjoy me going over the charts as screenshots, or if you like me interacting with the chart instead to give you a better visual representation of it. And I will see you guys on Friday.